Welcome back. If you are new here, my name is Jessica Abella, and I am a tax accountant and business advisor in the greater Seattle area. Today, we're going to talk about compensation for S corporation shareholders. So, if your business is taxed as an S corporation, you're required to pay yourself reasonable compensation through wages. That sounds very ambiguous, and it is a bit. I'd like to explain why and how, and to clear up some misconceptions. First, the why. When you're taxed as a sole proprietorship or a partnership, all of the profit of the business is subject to Social Security and Medicare taxes for the owners. It's about 15% of profit, which is not a small chunk of change. That is, of course, profit after deducting other expenses. So, when you make the election to be taxed as an S corporation, those profits suddenly aren't subject to Social Security and Medicare taxes anymore, which sounds great, right? This election became quite popular when people discovered that they could make this S Corp election and not pay into Social Security and Medicare. And of course, the IRS took notice. That is not allowed anymore. So, if you are working in your business, you are not just an investor, you are actually working in your business, and you are taking money from the business in some way. You must pay yourself a reasonable wage first. So, the first misconception when we talk about this is that you have to take a salary. And there are a couple of pieces to clarify in that. First of all, you don't have to pay yourself the same amount every pay period all year as the business owner. That's often not a reasonable expectation in a business where income goes up and down. So, if the business cannot afford to pay you, it cannot afford to pay you, and you don't get salary for that pay period. And your income may fluctuate just as the income of the business does. That's all okay. The important piece of that is that if you are taking money from the business, then those distributions have to be paid in the form of salary first, in the form of payroll. And then if you are taking distributions from the company, it can afford to pay you, and you have paid yourself a reasonable salary for the year. Anything over and above that can be distributed to you as a profit distribution as a shareholder of the company. You're going to pay tax on the profit either way, whether it stays in the business or you distribute it to yourself. Just know that you just have to meet that reasonable wage expectation first. Which leads to the question, of course, what is reasonable? Good question. The IRS and the courts have been very clear that zero or a dollar are not reasonable. What is reasonable is generally accepted to be what you would ordinarily pay someone else for similar services. What would it cost to replace you as the shareholder in the business, to have someone come in and do the work that you do within the business? So, how to determine that is a good question. However, you do it, document it carefully. If you are going out to do research about what others in your industry are paid, definitely document that carefully. The IRS has chosen this as an area to increase audits on. So, be careful. There is a site called RC Reports that sends you a survey, you fill it out, detailing sort of what your responsibilities are within your company and what your proficiency level for different responsibilities may be, how many hours you're working in the business, and it will return to you a report that has documentation. So, what about logistically? How do you pay yourself? We highly recommend using a payroll service like Gusto. This is not a sponsored video, but it is the service that we use within our firm with our clients. Use a payroll service to handle all the calculations and the payroll tax filings for you. So, if you've gotten this far, but you haven't actually filed an S election for your business, for your LLC, should you be taxed as an S corporation? And of course, there isn't a black and white answer to this. It's really a topic for another video, but if you're counting on making this election in order to save on Social Security and Medicare taxes, keep reasonable compensation in mind. Also note that as an S corporation, you're now paying additional administration costs You're paying for corporate tax return preparation and payroll services. In Washington state, you're also paying into the paid family medical leave and CARES programs on your salary. And you've reduced the amount of qualified business income deduction that you may be eligible for on your federal tax return. So there's definitely not a black and white answer to this, but it's definitely something to work through with someone who knows what they're talking about. So please make that decision very carefully. Don't jump into it. Um, Hopefully, this has been helpful. Do you have additional questions, either about this topic or about any other tax or business topic? Please leave them in the comments below. Like the video if it was helpful to you so that I know to focus on topics like this. Feel free to subscribe if you'd like to be notified of future videos. I try to post once a week, and I hope that you have a lovely week.